it's my year, yeah.
Morning, everybody. Happy Wednesday. Welcome to the morning show here on Stock Market TV. You know, best morning show in finance. I am Spencer Israel. I've got Steve Strazza. I've got JC Parets. I've got chart master Alfonso making some charts backstage as we speak. What's on the docket for today? Let's see. Larry Thompson is our guest at Hostile Charts on Twitter. He'll be joining in about 20 or so minutes. We have a certain macro event in the afternoon. I don't think we'll talk about it. I don't think we really care all that much. If it comes up, it comes up. But we'll try not to mention that event that shall not be named. I got some individual news on my mind. I know the guys have charts on their mind as well. You have questions in the chat. You always do. We love it. So go ahead, drop them in there, smash the like, and let's roll. It's the morning show.
All right. Good morning. Strazza just wants to make sure that in case people don't know that he lives in Florida, he just wants to make sure to get that across. Be like, all right. I spend my summers in Florida, right?
All year in Florida, but yeah. Mm-hmm.
You tend to spend more time in the winter in the Northeast and the summers in Florida. You know it's supposed to be the opposite, right?
We've talked about this holidays, but yeah, I like palm trees. So a lot of palm trees. Yeah.
Were they different in Malaysia, these palm trees, than they were in Florida, or is it the same thing?
No, I was actually amazed. Giancarlo will tell you, I was walking around going, oh my God, I have these flowers.
Well, the latitude is very similar, isn't it?
Like almost exactly the same.
Really?
In some of the places we were in the beginning of the trip. So yeah, there was a lot.
The humidity made you feel at home?
It's very similar climate to what I'm used to. A lot of the same trees and stuff. Yeah.
Nice.
All
right. Well, what do you say we hit the state of the markets there, Mr. Spencer?
Yeah, let's do it.
Hit it. All right. Today's state of the markets is going to start out with a question for Steve Strazza.
Give it to me.
Throw up slide 1. Tell me what this means to you. There it is.
Yeah.
So here we are looking at the Russell 1000 large cap index making new, I don't know, check my math, close to 20-year highs here relative to the Russell 2000 small cap. So in other words, big over little. And it looks like it's just getting going, doesn't it?
Yep. And I think you're going to see the tech ratios make new highs also. When that makes
doesn't it have to?
I don't know if it has to, right?
You think this can keep going without tech as a leader?
It is not impossible. Yeah.
Okay. Not impossible. Okay. So probably not.
I mean, listen, do you think XLK SPY ratio is going to break out and make new highs?
Yeah, probably.
Okay.
All right. Well, what's interesting here is the lack of risk on versus risk off indication here.
There isn't any. I would say
there isn't any.
Yeah,
that's right. Contrary to popular belief, right?
Yep.
Good point. There isn't any. Large caps outperforming small caps outperforming large caps. These things can happen in an environment that equities are going higher. These things can happen in an environment that equities going lower or sideways. But man, can we talk about the size of this base?
Massive.
Does this mean that we should expect more $3 trillion companies? Should we expect a $5 trillion company soon? Like, what are the implications of this going back to those 2000 highs? Like, we're talking about market capitalizations that we've never seen ever. And should that be all that surprising?
No. I think about this all the time. I was thinking about it just yesterday. The best tech stocks probably going to keep leading, but it can't last forever, right? It's already been going on for almost 10 years. The mega cap's leading. I just don't think that trend is over yet.
Can you throw slide 4 up there, Spencer? Because these are two monsters. These are two behemoths. You got the biggest company in the world, and is Microsoft the second?
See,
I think so.
Yeah, it is. But the correction in IWM SPY took how long? If you go back to that chart,
Back to the first one.
yeah, like since it peaked, now it's making new highs. Yeah, so early 2020, and if you look at something like tech on a relative basis or NASDAQ IWM, same thing, right? We went sideways since the summer of 2020. And now these things are breaking higher again. I think they're all going to end up looking the same way.
All right, but throw up two of the arguably most important components. You know, or not arguably. I mean, they are. Right? I mean, there's no way around it. It's just math. Spencer, throw up the Apple, Microsoft.
So what's your point? It doesn't make sense if they're not breaking out?
For that ratio to continue higher, don't these things need to go?
Do they have
Not
to?
impossible. Right?
They could go sideways.
You think that large cap, small cap ratio is going to rip higher and break out with these things going sideways? No.
First of all, if we were to correct here, that absolutely large caps will have shallower drawdowns than small caps, so that ratio will continue higher. Listen, crazier things have happened. Yes. Is the situation or the scenario that you're laying out easier if Apple and Microsoft are breaking out of these nice bases and carrying on higher? For sure.
Throw up the Amazon chart. Running into that former support.
The problem with this conversation is not so much the numerator, which your charts are focused on, but the denominator. IWM has been a terrible index to be in. Stuck in a sideways range forever.
Settle down there, Baba Louie. Let's focus on the numerator for right now. Let's focus on the numerator. Amazon, because we talked about Apple, we talked about Microsoft. They got to get going. They got to break out of those highs, right? What about Amazon? Back to those former support levels. It's got to break out. Take a look at Netflix there. Next chart. Very similar to Amazon.
Are you cherry picking? Because I don't hear you talking about Google.
Because Google's next. Clearly somebody hasn't taken a look at the doc. No, I'm not cherry picking. I'm making my point. Netflix also running into those highs. Google, on the other hand, next chart. Google. Well, this is the one we're long. So, I mean, I don't want to be like here, like talking my book all the time, but like, yes, this is the one we're long. Yeah, and it's working. So, good thing we're long. Remember, we put on that risk reversal a few weeks ago. It's working.
I remember. I remember.
You know, but again, the target was those former highs. So, just because we're making money in this trade doesn't mean that for the argument of putting our portfolios aside, for the conversation that we're having about that large cap outperformance, Google hitting our target and getting back to those former highs doesn't do any favors for that ratio.
No.
Right?
Depends what we're talking about. We're trying to make money off of the best stocks or figure out if small caps or large caps are going to lead.
Both.
You know, I think, here's what I care about. I think a very similar trade to the one that we're in Google is setting up in Amazon. And I think Google follows a similar path. And I think Google and Amazon look a lot more like Apple and Microsoft very soon. Back at those old highs. And we'll see what we do from there. This was really just a catch-up trade. The Google setup, right? It was that, hey, Google looks a hell of a lot like Apple and Microsoft did when they were resolving from their bases. Now they're back at their old highs. That's the bet we were making.
Yeah. Clean support, remember, target back to those former highs. Very, very clean. I got another interesting one for you. Again, I will pose the question. Slide 7, Mr. Israel. Uncanny how closely small caps and large cap financials have traded with one another.
Yeah. Did you take a look at that Buffett graphic I sent you?
No.
Oh, you got to watch that when you get a chance. We should talk about it. You'll love it.
What Buffett graphic?
It's a visualization. It's like a 60-second visualization of how his holdings have changed with bar charts over the past 20 years.
Just public or privates too?
think it's privates too because they
Oh wait,
have in there. No, they didn't have like Geico and stuff.
I didn't realize that was a video. I saw it on my phone. I thought it was
Those
just a
things
picture.
are bullshit, man. Everybody's always obsessed with the public holdings and completely ignore the private ones.
Dude, the public holdings are the biggest ones. What are you
No,
talking
they're not. Actually, it's a minority stake in the Berkshire Hathaway. What are you talking about?
Yeah, but those are the ones that we
the only ones that we care about as investors. I can't go buy, his private companies.
No, but don't you? But if you're buying Berkshire Hathaway, which we do all the time, we're selling naked puts on Berkshire, like we're making it rain naked puts on Berkshire all the time. Like when people think the world's going to come to an end, you sell naked puts on Berkshire. Like that's the JC move, hoping the old man is still alive the next day. Because if he's not, it's going to hurt.
We're different in that way. You're always looking to get long Berkshire, and you're almost always right when you do.
No, not long, just not short.
Right. Yeah, I get it.
Just because we're selling puts doesn't mean that needs to go up.
I like to know what he's buying and what he's in because he just builds these massive positions and just grows them. And that's what it showed. It's just incredible. Like how he in Coca-Cola for like 20 years, just slowly growing it. Amex, Wells Fargo for a while, Bank of America, simple companies, Kraft, Procter & Gamble. It's cool. You'd like it. Anyway.
Well, for the record, Berkshire Hathaway is making new all-time highs, right? Actually, I'm gonna throw these next two charts up there. Spencer, can you do me a solid? Here, hold on.
What really stands out in it is their holdings were always kind of like they would have a couple big ones, but there were like a handful of large holdings. Nothing was massive. Now Apple is like 4 or 5 times the size of their next largest holding. And it was never that kind of a thing for them, like where they were this exposed to a single equity.
Yeah, but it's not half the portfolio. It's less than half of the public portfolio, which is way less than half of the overall portfolio. So Apple represents much smaller composition than what people are like, oh, Berkshire's only up because of Apple. Bro, Apple's been struggling for months. Berkshire Hathaway keeps making new all-time highs. Berkshire's doing well despite Apple.
I don't know who you think you're arguing with. No one on here is making any assertion as to what the public versus private holdings are.
It's on the Twitter. You know how the kids talk on the Twitter.
Yeah. Okay. Got it.
They're like, oh, it's because of Apple. No, bro. It's not because of Apple. It's despite Apple. Notice how Apple's been struggling for a few months and Berkshire don't care?
Oh, God.
What are you laughing at?
No, I get it. I agree with you.
Okay, can we get back to my earlier point? Can you throw up slide 7, please? What's the deal, man? Why are small caps and financials just moving so closely together?
Not enough tech.
Because there's not enough tech in the small caps and not enough tech in the financials index, in other words. Is it that simple?
It's not a momentum index like these large cap indexes are.
The financials are, by the way, the 4th largest component of the Russell 2000. So it's not like, oh, it's because there's so many financials. Nope. That's not it.
It's there's a lot of things that look like financials, industrials.
Industrials look better. Industrials are already pushing up against those highs. Financials and small caps are not. What do you mean? Zoom out. Go to the chart right before this one, Spencer. Go to the long term. There you go. Industrials don't look like that. Industrials are pushing up against all-time highs.
Overweighting small caps is just a way. Everything comes back to growth versus value, doesn't it? All of these conversations we have, small versus large, U.S. versus ex-U.S., even stuff in the bond market, a lot of times it just comes back to growth versus value. Dow versus NASDAQ. This is another growth versus value situation. If you're in the Russell 2000, you're overweighting value, right? You're choosing to not be in the S&P where you'd be overweight growth.
Yeah, you got 15.5% industrials, by the way, in the Russell 2000, as opposed to in the S&P, it's 8, and in the NASDAQ 100, it's 4.
S&P is only 8% industrials these days?
That's higher. It was 7 before.
Wow.
Yeah, it's actually higher.
Who knew?
What'd you think it was?
Thought it was higher than that.
No, man, it was like 7. Now it's 8. It's been pretty steady there for quite some time. Energy is the one that keeps going between 3 and 5. Nobody's in that. Anyway, I just wanted to bring this up. I thought it was interesting, and then all right, I'll throw one for Strazza. I know how much he loves the Federal Reserve.
Ooh, give me some interest rate talk.
99% chance. Is it 99.9% chance or 99 even? Oh, it looks like 99 even. 99% chance that they do nothing today. So for those who care about these things, and you are in that camp, tell me why the market is going to be wrong for the first time in 14 years. Hasn't the Fed done exactly what the Fed Fund futures have told them to do?
No, not today, right? It's not about today. It's about sometime next year. And I think, so this is from Charlie's tweet. And what he pointed out was really interesting. And it's kind of the point that I'm making.
Charlie?
Bilello. He pointed out that it's been like.
From Charlie.
What?
I didn't get this from Charlie.
I dropped some sort of tweet in the chat.
Oh, yesterday when you were drafting a tweet. I remember that. Yes. You were taking it very seriously.
Different tweet. Anyway, Charlie pointed out that it's been about 15 years since Fed Fund futures got it wrong, right? So what Fed Fund futures are ultimately doing is they're creating a market and telling us what they think the Fed is going to do at its next meeting, right? And they're almost never wrong. In other words, if they say, hey, 99% chance that there's going to be nothing today, there's going to be nothing today. They're always right. So this is what I'm saying. When you look at Fed Fund futures, we're pricing in 3 cuts next year, no more hikes. If we get into a position where actually we need to hike and not cut, maybe there's some sort of like offsides trade.
I like how Strazza like includes himself in the Federal Reserve. He's like, we need to hike, you know.
Well, it's America.
Is it?
It's America.
This isn't a global thing?
It's the U.S. Federal Reserve. We don't control interest rates around the world.
Correct. But do they not, excuse my ignorance here, this is a serious question. Do they not consider global prices at all in their equations? How does that work?
They're not supposed to.
Really?
Based on their mandate? Absolutely not. No.
All right. I don't
Price stability. No.
I've always wondered what the hell these guys are looking at because they're always talking. Like, do they ever spend any time actually looking at any data? There's always like a speech, you know?
Yeah, I mean, look, they're global figures for sure. They go to all these conferences and give speeches and talk about global economics. But when it comes to Fed policy, they're supposed to be focusing on the U.S. economy and what's best for us here.
Sounds like such a terrible way to go through life.
Price stability and employment. That's it.
It's called a dual mandate. You learned about this in school, JC.
I actually did not learn about it in school. I learned about it on the job. They don't teach you this stuff in school.
They teach you this stuff in school.
They didn't teach me this stuff in school. I went to a good school.
Don't talk shit about the DSB, bro.
I'm not talking. I had a great experience at the Dolan School of Business. Shout out Fairfield University. Go Stags. You know, they didn't teach me this. And if they did, I wasn't there. Or, you know.
You know what? You're probably right. I did an econ minor in undergrad, so I had to learn about all of the funky economic stuff. And I actually loved it. Those are my favorite.
I had to take micro and macro with the same professor. This guy was terrible, man. Oh, I have nightmares about that.
I think they make those like the intro micro and intro macro a part of the liberal arts education.
Really?
I think so.
I had to do it in the business school.
Yeah, I had to take micro. It was awful.
Awful. Terrible.
See, but Spencer, you weren't even in the business school, right?
You're right, and I had to take it.
No, and it's good.
Can you imagine you're not even a business major and you got to sit through that shit? That must be terrible.
I'll go out on a limb and say intro to macroeconomics might be the most important class for everyone to take ever in the world. That's how the world works.
Nerd alert.
That's how the world works. The most.
Okay.
It's whatever.
Dude, when you're a freshman, that's the last thing you want to be sitting through. You know?
It's important
happy hour.
That everyone should know about.
Elasticity of demand. Oh, get me out. All right. Should we bring on our first guest of the day? We got Larry Thompson on. Hostile Charts on Twitter. If you don't follow him, you should. Great follow.
Larry.
And he's here, and he has a few charts for us to share. So, Larry, I hope you're ready. Coming on
for this interview for a month now.
Have we?
I have.
I don't. Okay.
Yeah, I like Larry.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey guys, what's up?
What's up, Larry?
What's
happening? How we doing?
Long time no see. We missed you
know.
at the CMT this year.
Yeah, it's been a minute. I was in Mexico, a little bit down there for some stuff, but
Before
I'll
you.
be there next year.
Just taking care of some things, doing
Yeah.
some things in Mexico. Yeah, it doesn't sound shady at all.
Yeah,
That's good.
Larry was doing his homework in Mexico.
There you go.
Boots
Some
on the ground.
cactus poison.
Okay.
It'll do you good. It'll do you
Yeah.
good. So what's happening, my man? So Larry the legend over here. Are you you come from a more accounting background, fundamental background, smells a lot like Strazza, then discovered that price is the only thing that pays, You're kind of like a little
Exactly.
Phil Perlman Jr. over here with your health stuff.
Hell,
I see
Larry.
you. I see
Yeah,
you.
exactly. Right. So went to college, read some Warren books. He talks a lot about you need to understand accounting to be a good investor. Went and got my CPA, thought it would make me a better investor. Started in that rat race and kind of learned just through market cycles of the past 5-6 years, 10 years plus actually, that price is what pays. All the message, all the data that everyone's trying to gather, the big brains, the small brains, it all is reflected in price at the end of the day. And so why not just go to the first derivative instead of trying to analyze second and third and fourth derivatives? Made my brain hurt and I didn't want to go bald too young. So figured I'd get in.
Are you guys listening to this? You hear him? Somebody's paying attention. Larry, how old are you, bro?
28.
Larry, you're so lucky that you've already made this journey at 28, man.
That's right.
Seriously.
Yeah.
There are people in their 50s and 60s and 70s that still haven't figured this out, man. You figured it out young.
Yep.
Well, what's that book by Ned Davis, right? I'd rather make money than be right. So that's what I'm trying to do. So
Good.
just what we're trying to do here.
So talk to me a little bit about, having both backgrounds now, right? Because where are you at with the CMT?
I just finished my last exam, so we're all done.
So CMT,
wow. Did you pass?
I did. Yeah.
You're gonna
Yeah. All right, congrats.
Thank you.
Stay current. You'll stay current with your CPA though and have both. Right?
Yes. Yep. That's what I'll do.
So now
are you practicing? Are you doing accounting stuff?
I am. So I work internally for a company, electrical component company. You look at their ticker. I'm not going to mention it here, but they're doing well. So,
having both backgrounds and both skill sets, when it comes to your personal investing and the analysis that you do outside of work, what are you using more? Do fundamentals play a role at all anymore? I mean, you can't just, things,
Good
things.
question.
So
Yeah.
you can't ignore them, right?
Yeah. So fundamentals, the basis at which I'll use it is shout out to Koifin. I do use Koifin. And one thing I'll just say is I use a lot of their just basic earnings screeners. And so for me, fundamentals is a sniff test, but price is what pays. So I just use fundamentals to get a basis of, hey, okay, I'm not buying something that's in a declining earnings cycle. I'm not buying something that, has a terrible balance sheet when interest rates are rising. So I use a lot of the basic financial statement products. And then from there, it's 100% technicals. I think
we have a lot of options, right? So it's a great filter. Why not use like some basic fundamental filters? Just really get the crap out. Is that what you're saying?
Sometimes
Exactly,
you're looking for the crap.
Sometimes
you are,
A
right?
lot of times, it seems like.
So you could filter it back in and sort
Exactly. And you have those two separate, right? You can have your junky fundamental companies, and those can be your risk indicators. Okay, these are junky companies that are getting bid. But then sometimes you have these cycle changes where these fundamental companies start to perform better, and people are like, these are crappy companies, but then the fundamentals don't catch up to price. And then that's when you get that bifurcation, that deviation is when money starts to be made, when you stick with those names while the fundamental people are getting out. Right. And that's trend. That's what Warren Buffett's the best trend follower I know, right? Warren Buffett just follows trends of fundamentals, which over time is outlaid in price. So
that's right. Larry, what's got your eye these days? What are you watching?
I mean, the market's a mess, right? I mean, that I shared a couple charts and I just think we're in no man's land, especially when you look at the S&P 500, right? You look at RSI, it's sitting in that middling range in the 50 area. You look at price, it's below that 4,600, above that 4,300 range. You can look at breadth, right? You look at the bullish percent index, which I don't think is used too often. I really like it. I like just the point and figure binary structure of.
Explain what it is. Why do we need this? What is this?
Bullish percent?
Yeah, it's calculating how many are in a point and figure buy signal. In the
Yes, exactly, right? And what it's showing right now is at 50% roughly. So roughly it's in the middle. So it's just confirming everything else that you're seeing with momentum, that you're seeing with price, and what you're seeing with breadth. It's just we're in no man's land. And Larry 5-6 years ago would be trying to trade this and getting chopped up. And right now I'm looking at it and I'm just waiting for resolution. You guys like the sports analogies, right? The best quarterbacks run offenses that are a lot of RPOs, right? Run pass options. And what they do is they react to signals, right? Just like we react to price signals. And they know whether to run the ball or pass the ball based on, what an outside linebacker's doing, what a safety's doing, what the coverage is. They react. The bad quarterbacks try to predict and they force routes, like what Kenny Pickett was doing the other night, right? They force passes that end up getting intercepted or blocked. And I'm not trying to do that. I'm just trying to react to the signals that it's presenting. And right now it's just telling me wait for resolution.
No, I think it's interesting what you're talking about in terms of reacting to what the market gives you. Dolphins played the Patriots this year. They had 3 deep the entire time to just stop, right? Tyreek Hill from going over the top or Waddle going from over the top. They're going to keep him down low. Miami ran for 160 yards or something like that.
Yeah,
they won the game. Miami ran for 145 yards.
They did
against a good running defense, right? Yeah. Scored 2 rushing touchdowns. They didn't have these explosive 60, 70-yard plays, but they won the game.
Exactly.
Play to win the game.
Exactly. And the week prior, right? 2 of 3 for 460 yards. So his team was focused on winning, not him throwing the ball. And guess what happened? They're 2-0 now, right? So same thing with the markets. It's no different.
So are you getting involved? Are you trading anything? You seeing anything beneath the surface? How about
yeah, so right. So I'm a junkie. So I'm not necessarily trading at the index level, but looking under the surface, some of the things I'm in are uranium. Energy looks great, right? If you look at yields and you look at the correlation between yields and energy, if you think yields are going to continue up, right? Energy is most likely going to continue up. All right, here's one of the charts. And so if they have this high correlation, you have to get exposure to energy. One of the ways you can do it, just buy energy stocks. So I have some SLB, Schlumberger, I heard you guys say. And so uranium looks good. CCJ over 30 looks great. But there's just little pockets. The overall correlation in the market between stocks is going down, which some will refer to that as a stock picker's market. I just refer to it as a more messy market. So I just have lighter positions, less positions currently.
This chart is making me smile. It's making my morning, Larry. It's good
stuff. So it
seems a little crowded.
The energy
like everybody agrees, Larry. No?
Well,
come on. Is the energy trade ever crowded?
I will say this. I will say everyone might agree, but everyone's not positioned to agree, right? If everyone was positioned to agree, energy wouldn't be 4% of the index, right? So I think it's people talk what they talk about, right? Everyone knew inflation was coming. How many people owned commodities, right? Same type of thing, in my opinion, that what people say to be smart versus what people do with their portfolios isn't necessarily 1-to-1.
All right, so let's talk about that. Talk to me about inflation. If you're long these things, you're probably expecting more. What's the Fed's next move going to be?
So the big thing for me with the yields is the rate of change. I think if you look at a rate of change in yields, that's where the rate of change is really slowed. And for businesses, right, CPA by trade, businesses love it when the rate of change slows. They can adapt over time. Businesses are dynamic, right? So now their debt structuring costs, not to get too fundamental, right? When they can take time to level out their debt structuring, that's a cost to them that they're able to predict. Whereas they're not able to do that when rates were rising as quickly as they did. So I see rates, there's probably a hurdle rate at which it really starts to impact the market. But I think if we chop sideways, that's the best news for us to get out of, this choppy period in the market from a seasonal perspective and kind of resolve higher. It's just, let's see that rate of change continue to dwindle. Let's see it kind of chop sideways for a few months.
Is the Fed done?
Who knows? I'm not here to predict anything.
I don't know. Larry, tell them.
So I would say if you believe energy is going to continue higher and you're positioned that way, you are probably also positioned in a way where you think rates are higher. The weird thing, and I'm curious your guys' thought here, is you're starting to see a correlation between yields and tech this half about the past like 3-6 months, you're starting to see a correlation if you look at XLK and yields. I'm just curious how that resolves. I'm curious how, when it does tech kind of wake up to the yields, or right, or is it just
are you saying you're surprised at how well tech has held up despite the move in yields?
The narrative is that the secular trend in AI is too strong. Roke said it yesterday. Sorry, Larry.
Yeah, exactly. I would say it's just interesting to me, and it's something I'm paying more closer attention to, because right, if tech is correlating with yields and energy is correlating with yields, I'm just going to own tech and energy. And one country that's positioned that way is if you look at Argentina. They have the Argentina ETF, Mercado Libre, tech heavy, right? And then they have a bunch of energy exposure. Look at that chart, right? So it's interesting.
Mercado Libre actually tech, isn't it consumer?
It's online shopping. It's as tech as Amazon is.
Okay, which Amazon is 0% weighting in technology.
Amazon's a tech stock, though. So
Amazon's 0% weighting in the technology index.
Tomatoes.
I hate to break it to you, but Amazon is a textbook tech stock.
I hate to break it to you, but in the real world, not in the textbook world, Amazon represents 25% of the consumer discretionary space and 0.00, Mr. Butarski, of the tech index.
I can't control what these GICS and these ratings companies do. I'm just telling you.
You can say everything's a tech stock. If we're going to go there, then everything's a tech stock. Why? Because it uses technology, because it's a website? That's bullshit. It's a consumer stock.
Why Amazon's a tech stock?
Amazon's not a tech stock. It's a consumer stock.
Oh my. Holy shit.
You could, so either way, right? Either way, you could still say the correlation between consumer discretionary and yields, which is normally inverse, is positive. So consumer discretionary plus energy. Just seeing the fact that you can own tech and energy and they're both correlating with yields, to me is just odd. At one point, I think one of them changes. I think Fed breaks something and energy turns over, or Fed doesn't break something and tech rips. So it's just like, I don't know if I'm going to make money in both for how long. So it's just a correlation.
I'm going to push back on the correlation. I don't know about the correlation. I think that one of them's got it right.
Yeah.
And it's the fact that bonds are down near lows and tech is still hovering near highs. There's got to be a reversion there. I mean, there doesn't have to be anything. In my opinion, there will be a reversion there, and one of them's got it right. Who's got it right? The stock market or the bond market, Larry?
Tough, right?
That's right. So, yeah, this ain't easy.
Yeah, it's not easy. I would say it's tough. I just wouldn't know. I would say bonds, right? Like bonds don't look great. You've seen a lot of whipsaws in the market recently. I would like to see bonds test a new low. Everyone thinks the world's going to end, right? Apple kind of breaks below that 175, stays below 175, right until the end of September, October. Everyone thinks the world's going to end, and then we whipsaw back up. I would like to see something like that because, as Steve kind of mentioned yesterday on Twitter, technicals aren't working the way, laymen's who are jumping off the couch to look at patterns think they work, right? It's a lot of the failed moves that end up being the best moves in the market. So I would like to see a failed breakdown in Apple. I'd like to see a failed breakdown in bonds. I'm just not sure yet how it's going to resolve because neither of them have done it. So
I'll just say, for the record, I think that divergence can last a lot longer than anybody.
It's already lasted longer than we thought. No?
Agreed.
I think it could keep going. We'll see. Hey, we got one from the chat for you, Larry. Why are your charts hostile?
Just the hostility between bulls and bears, man. Just the constant battle. And I think you just got to look for clarity in the hostility. That's it.
Can we do polls? I don't know.
We're doing a poll right now in the YouTube chat.
Good. Great.
Is Amazon a tech stock? Yes, no, not sure. Those are your options.
Well, according to the, if you really want to get down to it and give Strazza some credit, the New York Stock Exchange Technology Index does include Amazon, a whopping 3%.
I don't care what index includes what. It's a tech stock. I don't need it to be included in an index or a basket of stocks.
And why is it a tech? Why? Because of their cloud business. All right. How much of Amazon's market cap you think is their cloud business?
They're the largest cloud provider in the world. Okay.
So what? If AWS was its own company, it would be an S&P 100 company, which would put the market cap at what? 150 billion, 200 billion?
It would be
More
a lot
than that.
more than that.
Yeah.
Would it? I'm
lot
asking.
more.
I'm
Yeah,
asking.
it would be. It would be. That's their highest from like a fundamental perspective. That's their highest growth leader. That would have the highest valuation.
That's what
And
they
so I
are.
Where
think-
do you put it, Larry, Mr. Accounting?
It would be huge. Be
Yeah. So what's the market cap? It'd be half. It'd be more than half probably.
Really? You think so?
Yeah, I
$1
think so.
company.
Yeah,
All right.
I think so.
So that's a cloud business,
I
which
stand corrected.
is tech. And then it's the simple fact that their business was founded as an online marketplace during the .com era.
Right. So a bookstore. So like a consumer stock, right?
I'm done with this.
Sorry.
All right.
AC,
Listen,
take the L. Jason.
What are,
there's no right answer to this. It's a conversation. It's a discussion. It gets the mind going in the morning. This is a an exercise, right? Hold on. Speaking of which, let's get to Larry, because Larry, 26 years old. I'm thinking what I was doing when I was 26 years old, and it wasn't what you're doing. I was at a lot of happy hours. I was at a lot of late night dinners. Not a lot of hours of sleep in the middle of the night. Back to work 7 a.m. I mean, I was killing myself at your age. How are you? Tell the folks where you live. What kind of lifestyle you're living.
Yeah, so
how you got into the Perlmanisms.
yeah, so I grew up, in a poor obese family household. So I just like poverty kind of motivates you, right? So I would just say from that perspective, grew up in a small southern town, broken family, kind of moved all over growing up, and kind of just taking ownership for things I can control in my life is, I guess, what I would say, right? So health is one of the things I can control, right? My investments and how I see the market is one of the things I can control. So I just focus on the things I can control. I'm in Greenville, South Carolina now. Love it down here. Beautiful weather this time of year. Getting married next May.
Congrats, bro.
About.
Congrats.
Yeah.
Growing up.
Right. Yeah, have 3 dogs. So I'm kind of an old soul, I guess, from that perspective. So, but yeah, just, keeping on, trying to learn, trying to build a great foundation, because this is something I want to do forever, right? It's an infinite game of just looking at charts.
Larry playing the long game. I like it. And so when are you coming up to New York? Any plans?
I'm actually coming in October. So my friend's running one of these marathons. So I think the October 13th. So about a month from now, I'll be up
The New
there.
York City Marathon?
It's a smaller one. He's running one of the smaller ones, but I'm coming up. We have my future sister-in-law lives there. So we'll be up.
Sweet. Hey, let me know. I'm in the city quite a bit.
Love it. Love
Get
it. Yeah.
together.
We have a direct flight. So anytime really I can get up there. So
Where do you fly into?
LaGuardia.
Oh, yeah.
So
it's lovely this time of year, that area.
It's direct. I mean, what is it? Commute into New York's never great. I mean, sometimes when I used to work there, I used to have a client there. The travel to get to the airport was longer than my flight back to Charlotte, because I used to live in Charlotte. It'd be 2 hours to get to the airport, hour flight back to Charlotte. So
yeah, that sounds about right. Awesome. Yeah. Larry, listen, be in touch with me when you're coming in. Take you out, show you a good time.
Yeah. Thanks, guys.
Good work.
You got it. Thanks for coming. Larry the legend.
He's
Good
great.
egg. Good egg. He's way ahead of of schedule there, that kid. Right?
Big time, man. It's so valuable to know the things that can get you in trouble with investing and trading.
I mean, you and me, we talk to young cats quite a bit, even way younger than, we were hanging out with Louis last week. I mean, they're way ahead of the game where we were at that age, right?
No, it's impressive. I love to see it. Really.
Yeah. Good for him. Good for him. Why don't we run down the futures market with the Dow Jones Industrial Average, the world's most important index, up over 130 points here pre-market. S&P futures up 40 bips, NASDAQ futures up 40 bips, bond futures on the 30-year up 40 bips, gold flat, silver up 50 bips, copper up 40 bips, crude oil down 1%, natty gas down 3.5%, the Widowmaker whipsawing every day as usual, and the dollar ticking lower with volatility ticking slightly lower and interest rates ticking slightly lower. And that, my friends, is the futures rundown brought to you by Palm Trees Incorporated.
All right, let's do some other movers before we bring Kimmy on here in a second. Can you guys hear me? I'm having some internet issues today, but I hope I'm all
Yeah,
good.
you're doing it right,
I hope-
Spencer.
Okay.
But-
All right. Let's see what's on my radar as far as stock-specific news. Pinterest is trading up this morning. They had their investor day yesterday. I guess the street liked the comments there. The CEO said that we believe we'll grow revenue in the mid to high teens and improve EBITDA margin to the low 30% range in the coming 3 to 5 years. So Pinterest is up. What was it? Last I checked, it was
About 5%.
about 4 or 5%. All right. So there's that.
Yeah.
And there's a chart you can see.
Can I say something? Or you're just gonna keep
Yeah. No, go.
social media is tough, man. There's a couple
Oh, yeah.
great names in this space, and then it seems like everybody else just struggles. We've been waiting for this base to break out all year. A couple of false starts already. I think it gets interesting once it clears that little resistance zone drawn on the chart, but it's been a sloppy trade. We've tried to enter it at least once already.
Wait for the breakout. If it ever breaks out. I mean, Pinterest, anybody use this? I don't use it.
Big institutions in this name.
Institutional ownership.
Yep.
But what about just from a consumer standpoint? Is this just like all like moms and like cat pictures and stuff? Is that what this is?
You use it.
Yeah.
I don't. So you would have to.
I
tell me.
use it.
You've used Pinterest.
Yeah, because like I'll Google like we've been redoing our backyard or doing it because there was nothing there. So just kind of getting ideas.
DIY.
I also bars like we're putting a bar. We redid our basement and we're putting a bar, so I'm kind of getting like some bar ideas. I guess so. I guess I use it like rarely.
It's more than us, man.
No, but I think like women use it for like fashion stuff
and for home decor, things like
and
that.
home decor. So see, I'm using it for home decor.
Yeah.
So Elliot has been in this one and shaking things up since like they got in last summer. I think they got
Who's Elliot?
Elliot
Management.
Who are they?
Paul Singer, right? Paul Singer. I think
Am I supposed to
You
know
don't
these
want
people?
you don't want to tango with those guys, man. They
famous
I
activist.
don't know who these people are.
Dude. One of the more successful activist shops on Wall Street.
Really? All right.
Yeah.
That's my bad.
yeah.
So they have a big stake and they're trying to impact some changes. I don't know how it's going, but the stock's barely moved since they got in. So, we've been tracking it. It's on the hot list. We'll see.
All right. Elsewhere on my list, I'm watching Coty, COTY. They raised their guidance for the first half of next year. So they raised their sales growth outlook by a couple.
Here's what I'll tell you about this one.
Couple percentage points.
If you want to own a makeup or a cosmetic stock, there's better ones.
I agree.
There's charts that just don't stop moving higher, like ELF.
So they have direct to consumer website and duty free shops under Burberry, Calvin Klein, Chloe, Davidoff, Gucci, Hugo Boss.
I don't understand it.
Kylie Jenner.
I don't get it. I don't know.
I don't really get it either. It's beauty products.
I don't know.
They sell beauty products in supermarkets and stuff. I don't know any other beauty products though.
Is there anything else in the news today, or is this just like a?
One more. I love this classic. Dollar General downgrade. Now JP Morgan is downgrading the stock this morning, so that's why DG is down today. But where you been, JP Morgan?
But Dollar General is not the dollar store. Dollar General doesn't actually sell things for the dollar, right?
Dollar General is like the lowest. How would you say it? Like the lowest end of the consumer market, right? It's like super cheap supplies. It is a dollar store, but they sell things for more than $1, right?
They're all dollar stores. They have dollar.
You can get some like basic groceries there. You can get like housing supplies there.
I don't think I've ever seen one of these stores.
Dude, they're all over.
Are they?
They are all over.
Dollar General. I seen Dollar Tree. My daughter's favorite store is the dollar store.
Family Dollar got merged with another one of them. It used to be FDO.
I'm the only person that goes into the dollar store spends $30 because my daughter gets 30 things.
Anyway, JP Morgan specifically citing weakness in the consumer due to inflation as to why Dollar General is a downgrade or is a sell. Now, thanks for that, the stock is down by more than half in the last year. So thanks.
How about any of this news from Goldman?
25 billion still.
Hold on. How about some of this Goldman news? Did you see any of this?
The one with Apple?
Yeah, what do you think about that? I mean, are they just going to take over? I would love to just bank with Apple and own stocks through Apple, have my whole life be through Apple.
I mean, that's probably the future. I have a theory that Apple and Google and Amazon are going to actually end up integrating themselves with home builders. You're going to be able to move into a house that has Amazon built, or Amazon or Apple or Google built into your house in some way. But yeah, they're all going to get into every aspect of our lives, banking, everything.
These banks better watch out, man. I think Goldman's making the smartest move because they're partnering with them in all of these endeavors. If you can't beat them, join them. They're already
That
off.
Goldman chart doesn't look terrible, man.
Listen, so the news was, we should mention what we're talking about. Apple scrapped plans that it had on the table last year to launch a stock trading platform.
Well, I'm unclear about what this is because it says like a stock trading feature for iPhone, but like that's what apps are for. So I don't quite know.
It would be their own app.
Their own
Like
app,
their own
okay.
Robin Hood.
Yeah.
All right,
Like
Right?
Apple Hood.
cool, I guess.
Something.
They have their own bank
Okay.
now. Why not have their own brokerage? It's just the next step.
Do they officially have their own bank? Is it actually theirs, or is it a different
No,
bank and they're just
They are not a bank. Goldman is doing it, and that's why I'm saying Goldman's smart. Partner up with them. Do whatever they want.
throw up that Goldman chart? Look at
Yeah,
that.
Goldman, and Jerry Carey's right. Goldman is trying to get out of their Apple Card partnership.
Throw
I
up
don't
that
know if they
Goldman chart
actually did.
before we bring in Kimmy. Look at this.
Yeah,
It doesn't look terrible. I mean, it's the opposite of terrible. It's actually pretty impressive.
Yeah, Morgan
No?
too. Morgan too.
Looks like an energy stock.
Yeah, some banks look better than others.
Yeah, is Goldman a bank, quote unquote?
No, they're an investment bank.
Is it a tech stock too?
Listen, they're one of the 6 large money center banks. But they also had a note out yesterday.
Everything's a tech stock.
Goldman's not a tech stock. How about this one?
It should be a tech stock because they're working with Apple, so it must be a tech stock.
Here, this is from a Goldman note yesterday. We believe that most of the rally is behind us and that Brent is unlikely to sustainably exceed $105 a barrel next year. OPEC is unlikely to push prices to extreme levels, which would destroy its long-term residual demand. So they're calling pretty much, don't get too excited about oil. That's it.
all right, we'll see.
All right, we'll see. Why don't we hear what Kimmy has to say today as we go into a little
Yeah.
Fed meeting, a little how you doing Fed action.
Kimmy's here. Let's go.
Kimmy,
Hey guys, how are ya?
4 for 5 yesterday. Not too shabby, Kimmy. Not too shabby. 4 for 5. What did we set the over under at 3.5? JC wins again.
Funny. Yes, Rachel's right. All that Dollar General, they're all down south. Everywhere I turn, they're like on every other block.
All right.
They're
Hi,
everywhere.
Rachel.
So you
They're
know.
everywhere.
So all right. So long CVS for a profit yesterday. Long Adobe for a profit yesterday. Long Dix for a profit yesterday. Long small caps IWM for a profit, and then a little bit of a loss on the Coinbase. Nice trading day, Kimmy. Today, Fed day. Talk to me. How are you approaching
They're
this
gapping
market?
up the market. They're gapping up the market, which whatever reason that they feel like gapping it up. But I wrote my morning note that either the market will run to 447.70 or maybe even above that, or it's going to, after he speaks, or dropping back down to the 435, 437 area. So, it's hard to know. Do you think he raises? I don't think
Not
he
today.
raises.
No, the market's saying virtually no shot that they raise today. They're not going to. They're doing
Right, but I guess it's all to see if he's hawkish or not, right? Also, Snap, interesting. I saw you guys commented on Snap. I had a trigger yesterday. I brought it up to the room, but the market was so shaky yesterday, and then it popped later in the day. But I had an alert at 8:60, 8:60, and I alerted to the room. I'm like, typically I'd probably buy it here because it closed a gap at 860, I would have bought it maybe for like a bounce trade, and it did pop over 9. But anyway, I did buy IWM yesterday at 181.50. I was looking for a move to 182, and I just got impatient, but a couple of people in the room stayed with it. But it was later in the day the market popped, so I said, it could happen later in the day or they sell it off. So
Kimmy, talk to me about this Airbnb that you're pointing out to this morning. Little flaggy?
Yeah, it's a little flaggy. We'll see if it gets going. We'll see if anything really gets going. I don't want to be stuck in anything. We'll see if it gets above this like 142, 50, 60 area for a move, back up to like 145 or so. I mean, the market's popping even more from this morning, so I'm not sure where it's indicating right now. So I'm going to let some things trade and see how it moves. The banks, like I said, Goldman, were they doing a secondary? I think were they down a little bit?
They're not doing a secondary.
No, what were they
there
doing?
Was like 15 headlines on Goldman Sachs this morning. There was a headline about a thing with Apple. There was a headline about they're trying to spin off Green Sky. They're selling that.
Right. Yeah, I'm not sure I'd want Apple and Amazon or whatever built into my house. It's kind of creepy.
Well, that's the future.
I know, Kimmy, but I'm
not an Apple person. I'm sorry. I do not own Apple products.
Kimmy, you're such a boomer. Are you kidding me? Are you one of these people? Like if this was 20 years ago, you'd be one of those people like putting the credit card on the internet? No way. That would have been you.
Dude, I'm a Samsung girl. Samsung all the way.
What even is that?
Hey,
Kimmy, come on.
Samsung's
what
one of
is that? It's the best phone. What's an Apple?
One of the largest tech companies in the world. Samsung's big.
What? Samsung's big. Big.
Speaking of big,
they have a better camera.
Listen, speaking of big, Airbnb, which is the stock that Kimmy is pointing out to this morning, $90 billion in market cap. Did you know Airbnb was that big?
Late stage venture, man.
I would have guessed like 20, 30, maybe, 90 billion. Wow, very impressive. Kimmy, last question before we let you run.
Yeah.
What time is this thing that they do? 2 o'clock, 2:30?
Yeah, so we'll see. I think after the first half hour, the market's going to start to get volatile. So, it's been like pulling teeth, slim pickings all week. I'm trying to like protect the room, like not really go into too many stuff, not going crazy with things. I'm kind of like, hey guys, you want to test this versus this, it just because it's kind of been very sloppy the past 2 days. Maybe we'll have more of a direction after he's done, but I do not trade after the Fed. We'll see if something comes to fruition this morning. I'm not going to push it. If there is something, there is something. And then I'll say la vie. I'll watch it. I mean, I'm watching it in front of my computer all day.
That was my big question. Like, are you treating the morning session differently than the afternoon?
Yeah, so I'm treating this morning session different than anything else because we might, I think after the first half hour, volatility will kick up and it might not be that exciting. So we'll see.
And then what? So then tomorrow's a new day and now it's behind us and now we can approach the market with
Yeah, and we have to see which way the market wants to go. Are we going back up to 450? Are we going to 455, close a gap up there, or are we heading back
on
down?
SPY?
What?
On SPY.
SPY. Sorry, on the SPY. Sorry.
No, listen, it's okay. Listen, not everybody talks trader language, so I try to be that.
SPY girl. Watch the SPYs and IWMs. I watch them even more than the Qs. I don't know why. I just do. It's just
because the S&P 500 is a better representative of the overall market than the NASDAQ 100, and the Dow Jones Industrial Average is better than both of those put together.
That's right.
People don't like it when I say
Kimmy
that.
is a green bubble. Green bubble. All right, guys.
All right, Kimmy, go get him, Tiger.
Have a good one. All right, bye. See ya.
Yeah, I'll say it again. I say it all the time. I don't know why people get so upset about it. It's the Dow Jones Industrial Average is the world's most important index. No? Spencer, have you come around to that?
I don't know if we have time to get into that again. So I will just say sure.
Have we exhausted that already?
We've exhausted that. Anyway, guys, check out Kimmy's room. The link was on the screen. The link is in the description. She's there trading right now. Mostly in the first hour of the day is most of her trades are. So go hop in and see what she's trading as she is trading it and not the next day when she talks about it.
Strazza, would you have guessed that Airbnb is $90 billion in market cap?
No, I wouldn't have. Wow.
And that's $90 billion in market cap, and the stock's down 25% off its high. So that means it was what? 120?
Airbnb and Uber are two consumer stocks that have me super excited for the long term. Been saying.
I'm banned from Airbnb because I
Good.
broke that chair that one time.
Funny thing, did you guys read that article I sent you?
I skimmed it. It was a lot of fluff.
Me too. It was stupid.
It was dumb.
But the story remains that it's been a huge initiative for their company over the past 3 years. And that's why they're so tight, JC, and why you're banned.
He's talking about the article from CNBC about how they've cut down on parties by 55% in the last couple
They have algorithms to identify if you're a party risk, and then they kick you off. They don't let you rent rooms. So, like, if it's close to your birthday or you're like renting in a party place,
wow,
they'll catch
that's crazy
and not rent to you.
Because when I got banned, you guys were already there. I show up in the morning.
Stop.
I sit down on the chair, and the chair breaks, and then I didn't even do anything. We hadn't even started drinking. It was first thing in the morning.
True.
Sat down, the chair breaks. Then a little while later, I go to open the doorknob falls off. Like, and now I can't book an Airbnb because of that. I feel like we've done way worse at Airbnbs before, and that's what I'm banned for. Like, this is ridiculous.
5-10 minutes, you were just walking around the house, and everything you touched was breaking.
Remember?
Yeah.
What the hell, man?
It's great.
All right, you want to get into some hot corner? I think we have some good stuff. I've been told on the hot corner.
Yes,
today.
hit it.
All right,
it's okay.
Where's my hot corner bumper?
Hot corner. So hot right now.
Give me the goods. Show me the table.
Give me the goods.
Uber stands out. Options activity. November 17th, $40 calls. Is that slightly out of the money? Excuse me. No, very much in the money, actually. So it doesn't stand out too much from, perspective of being like an aggressive bet that's being made, right? We're like $8 into the money already in these. But stands out nonetheless. Uber's chart looks really good. It's one of those that's just climbing a nice base. In terms of the insider activity, okay,
20 million, that biotech. It's a little nothing, though.
Avago, Harry U, Form 4, almost $1 million. AVGO.
That's a nice check. I can appreciate that.
Yep. CNX Resources was also on there.
I was going to say, there we go. Bernard Lanigan Jr. dropping 3.6 milli.
Mm-hmm.
Not nothing.
You
he's doing that because he thinks the stock goes down?
No, you got those pivot highs, though, from last year. That's really the level. You can buy strength above there. But you're right. A notable Form 4 filing.
Somebody's ponying. You see, this is somebody who likes something, is going to pony up. Bernard Langan Jr. You think this is a lot of money for him?
No, because I've heard the name before.
Bernard Langan Jr.?
Yeah.
I don't know.
Sounds like
and
a
then
golfer.
CNX, this is an EMP name, right?
You ever heard of this RXO? I know.
I don't think this guy's that rich, by the way. I think this is a lot of money for him.
Again, I don't know. Have you heard of this RXO though? You're in a logistics family.
He's a former CFO.
Is he? Where?
Yeah. He's one of you. Like, he's one of you people. With like the accounting stuff. Bernard Langan Jr., CPA.
CFOs are usually the smartest guys in the room, just saying.
Yeah, that's right. But they don't get anything done because they're so worried with their spreadsheets. Then they never move anything forward. They need a CEO to actually get shit done. There's nothing wrong with that.
Maybe the CFO.
The CEO doesn't need to be smarter. He just needs to have bigger balls.
And right? a lot of times that is the exact dynamic, what you're describing. You're right.
I know.
It's
my first rodeo.
And it's a good dynamic. Yeah.
It is a good dynamic.
Yep.
It's like, if it was up to Danny, nothing would ever get done. But without Danny, nothing would ever be done, right? Like, you know what I'm saying? Like, it's a good dynamic.
Speaking of which, I got to call that man.
Yes, indeed. All right, so what else stands out?
That's really it. The other one's small names. This RXO I thought was interesting because it's a trucker, but the chart doesn't look good. Frontier Communications, you know how I feel about these telco names, so I would stay away from that. And then again, CNX, that's a strong setup. So CNX and Broadcom, two solid.
I was told to mention IonQ for unusual options.
Yeah, that's fine.
This name, the IonQ between the insider buying, right? Ton of insider buying there as well.
Yeah,
right? Over time.
We've been long this name maybe twice. I think we might be already on second target hit in this one, but it's been popping up on a lot of scans for us really all year. So nice base. I think we're heading back to those former all-time highs from late 21. So that would put you at about $36 a share.
This West Rock coffee has come up a few times as well. This thing's a hot piece of garbage, though.
Yeah. What? I wonder what brands do they own? Let's check. West Rock.
So this is a $900 million company. They own.
Never heard of it.
I don't think they own anything. They provide coffee sourcing, so they're like in the operations of coffee.
Oh, it's the parts. They distribute container board and paper board products, folding cartons, bleached paper board, coated recycled paper. Yeah, I'll bet you they make those crappy environmental straws that I hate too.
Dude, I don't understand these paper straws. Is disgusting.
Those soggy straws that ruin every milkshake and peanut butter.
Oh, dude, we're not saving any turtles with these paper straws, man. Like, move on.
I don't understand. My own plastic straws and keep them in the cabinet. It's ridiculous.
Seriously, man. Jeez Louise.
You know, I like the big fat plastic ones that they give you when you drink the boba tea. So
yeah, those are the best. Those are good.
Boba tea.
Wait, speaking of hearing of brands, I'm going to bring Mary on in a second. But has anyone heard of Duck Donuts? Does anyone know what that is?
Yeah,
Duck Donuts.
Duck Donuts. They got one in Avalon.
Okay, I hadn't heard of it before. Apparently, there's one coming to my hometown. My mom was very excited, but I never heard of it, and my wife never heard of it. So I don't know. Never heard of that.
Duck Donuts. Oh yeah.
Okay.
Is it a public company?
No,
I don't think so.
No.
It looks it looks like a divey little donut shop. I didn't realize there was a chain.
I didn't realize there was a thing until yesterday. Okay, it's Wednesday.
New Jersey.
It's Wednesday. On Wednesdays we have mornings with Mary, and she's here right now. So let's bring her on and see what's on her mind.
Best bumper in the business.
Yeah.
Mary in the house with the All-Star Charts gear.
Hi, Mary.
Well, hey guys, I wasn't going to compete with Steve's shirt, so
you can't.
I can't.
You can't do it.
So.
You can't do it.
So
Look at this. You got Mary today rocking the gear. John Roque yesterday rocking the gear. I mean, we saw a Fibonacci is my homeboy in the wild in California last week. I mean, this gear is getting hot. I don't know.
I always wear my Sell Puts Naked shirt when I travel.
I saw you in the airplane. And so Strazza and I coincidentally were on the same plane. And I was already sitting there. And Strazza walks in, kind of just like moseying on in with his Sell Puts Naked t-shirt. I'm like,
I always get compliments on that shirt.
I wear my Buy the Smile a lot. And my son, who's 10, he wants that shirt now too. He's the one that's so interested in the stock market and always has the charts up and looking at the futures in the morning. So he wants to buy the Smile shirt. So I need to get on a child size for him.
That ASC swag is hot. Mary, what are we buying?
Okay, so do you guys remember a couple of weeks ago, we were talking about AMR, CEIX, got in those trades right as they were breaking those levels. So, that coal, yes, I'm very happy. I've made a lot of money on those trades. So just recently we had our All-Star Charts Premium conference call this week, and kudos to JC and the rest of the team. There's a new name on our list of coal stocks that we're watching that I am particularly following closely. It is Arch. Arch Resources. I like this one a lot, just because we've got, went up to that 152 level, came back in and rechecked that original base breakout. Here we are back again. And, with the way that this has been moving, I'm excited about this one. So I'm looking at getting in this one very, very soon.
The volume.
Strazza,
Yeah.
can you throw up the chart on when they changed their name? You have that handy?
Bonds, do we have that? We should have that. Here, I'll grab it quick.
Well, the sentiment in coal was so bad that they literally took coal out of their name and changed their name to Arch Resources. I mean, it doesn't get any cleaner than that, Mary.
Absolutely. And one of the other things that we've mentioned this on our conference call, but also this hit one of our scans, our follow the flow report. And you can see on the chart, we have October 20th, 155 calls on the offer. And so, it's the space has been getting a lot of attention, and it's a trade that's been working, obviously. And now Arch looks like it's getting ready to go too.
I think I will probably buy those exact calls today. Been waiting for this thing to kind of cool off. It's just been real high and tight here. Still incredibly overbought. So don't love it. I'll probably buy a handful of these just to have some sort of exposure. I'm not in Arch. I'm in BTU and the other two.
Right. Yeah. And so that was going to be one of my questions, just because, they've had a pretty good run here. And I've already started taking some of the position off on AMR and CEIX, just, capture some of these gains. With Arch, where it's at right now, do we need to, that's why I'm watching it. Do we need to wait and let it cool off a little bit, or?
It's hard to say, right?
Yeah.
When these things start going, I mean, they can really rip. But I think the odds of, getting much more from, a RSI 14 at 80 right now are not great, right? So I would love to see it take a breather.
Yep.
We'll see. I still think into the end of the year, these things keep going, and the ones that haven't broke out yet are just as interesting as any of them, like Arch. Met Coal looks like it's going now. BTU's not even close. So there's a lot to watch there.
Yeah,
Mary,
I've been watching BTU too.
What stands out outside of energy, Mary?
Okay, so I've got another one from our International Hall of Famers, also from the All-Star Charts Premium membership. Love the premium membership. Toyota Motors. So I'm a Michigan girl, and of course we've got all the drama going on with the unions and the strikes and all the things. So this popped up on our scan, and I called my husband into the office and said, "Tell me about Toyota Motor. I love my Toyota. I have one." And
why does your husband know about Toyota?
Well, so he is in the auto industry. He's a supplier for the auto industry. He actually works on Toyota. He does the engineering for the overhead systems and the headliners, so everything like above your head. So I said, "Tell me about Toyota, and is there any impact with the strikes and the unions with regards to stuff that's happening on the east side of the state?" And he said they shouldn't be affected at all unless it was to impact a supplier, if somewhere in the whole mix, if the supplier was to go down just because they weren't being paid. But that would have business with Toyota. Same with Honda.
Mary, I wonder, I would love to ask him, what are the odds of this creating such a shortage from the U.S. autos that maybe the simple result is higher demand for the ones that are still able to make the cars?
Exactly. Yeah. And so that's why so when I saw Toyota hit our scan, of course I pull up the chart, and we've got the base on base, the higher highs, higher lows, all the way back from the 2008. And so, the chart looks super nice. It came back and checked in at that former level. And again, it looks like it's off to the races. So I like it.
Yeah, I'm totally with you. The Japanese autos just look different. Honda also looks great. Are
we going to pretend that this has nothing to do with the Nikkei outperforming the S&P 500 and is just a way stronger index?
No, not at all. What do you mean?
So we're not going to pretend, or we are going to pretend?
Of course, the Japanese equity market is the strongest equity market around the world right now.
Mary, as a Michiganite,
Michigander.
Is that what it is?
It's a Michigander.
As a Michigander. Strazza, you know more about this stuff than me, but aren't these union guys just putting their employers out of business? How does this work? They're just taking all the money from the company, and the company's going to go belly up, and they're going to all be out of jobs.
But yes, but that's been the knock on unions forever, right? That they're not mindful enough of the actual underlying business, and they'll hurt it to a point where they hurt everybody.
And shareholders penalize them for that, obviously.
Well, shareholders also get penalized, right? Because the stock doesn't perform well.
Well, they are no longer shareholders, is my point, right? You know,
Listen,
they're voting with their money. So they're like, all right, if these unions are going to destroy the company, I'm out. See you later. I'm going to go buy Toyota.
Ford and GM,
Right?
from what I understand,
Or Tesla.
Ford and GM, from what I understand, at least they used to, they have a moat in terms of like they sell fleets to like governments and agencies, right? I'm talking police cars, fire stations. They equip, so they have these big contracts. And if they're on strike for too long and they can't fulfill those contracts, then they might be void and they can go sign a deal with somebody else. And that could really hurt these businesses. It's a big piece of what they do. If they start to lose those deals, I mean, I don't know. I don't know anything about these businesses. They've never been good businesses as long as I've been paying attention to the stock market. So really uninteresting in terms of if we're talking about like Ford and GM. Stellantis looks a little bit better, but
it does look a little bit better. But at the end of the day, these companies have one job and one job alone, and that's to increase shareholder value. Their employees are not a priority at all. So I don't know where these employees think that they're important. They're not, right? Shareholder value is the most important job for a publicly traded company. So this just seems to defeat the entire purpose of what they're doing. And again, I'm not Mr. Fundamental guy. I'm asking these questions. Strazza knows more about this than I do, and Mary's literally there. Although Mary hates on Detroit. You hate on Detroit. you Michiganders that are not in Detroit. You guys are haters, right?
Yeah, I love the west side of the state where I live. It's just east and west. It's just different. But I do love my Ann Arbor and go blue.
As much as the this auto strike, seems a little obnoxious, the pilot strike is worse.
There's a pilot strike?
That's been going on.
And then there's the in LA, all these writers are striking. Everybody's striking. Nobody wants to work these days. What's the sitch?
You know what? I hate, oh God, this is going to be such an unhot take, but these labor intensive industries, that people are sitting in boardrooms just like salivating over what AI can do for them.
Yeah, what's wrong with that?
Want to get rid of these people.
Get rid of them.
I know. Some you can't, right? So pilots, they're important, writers.
Pilots, true. Yeah, I don't necessarily know that I want AI flying me to California, right?
So
one day.
There's going to, listen, as this AI revolution and robotics really take hold, you're going to see more and more strikes.
It's an interesting perspective.
Yeah, I know, but every time we get technology shift, you hear the same thing. People are going to lose their jobs, da-da-da-da. Yeah, maybe they lose their jobs, good, but there's going to be more jobs created because of the technology, right? The jobs might be different, right? Like you don't have fax machine salesmen anymore, right? They became software sales, right? You know what I mean? Like,
there's not going to be more jobs. There's not. There's going to be people who own robots and do really well.
Well, unemployment's too low as it is anyway, right? Isn't that part of the problem?
That's part of the problem. I was about to say,
I mean,
we can't even, we can't even get people to work the line. Where my husband works with the automotive supplier, they can't get people to fill the lines, to work the lines.
There's almost 2 jobs available for every person looking for a job.
Seriously.
Right?
Yeah,
that's no
absolutely.
good. All right.
Trendspiders mentioning this universal business income. Have you heard this take?
Oh my God. I haven't, but tell me.
Getting more
How bad? How
like,
bad?
AI just kind of takes over. Nobody works anymore, and people just get like paid to sit home.
Yeah, it's never going to happen.
So that's called communism.
Never
it's called communism, happen. And we know it doesn't work.
Wasn't that the WALL-E movie from Disney?
Yeah, yes, Mary. Yes, it was.
Where the machines just take over and everyone just sits around and gets fat.
Mary, how much are you thinking about the Roman Empire? How often?
Not at all. Sorry, JC.
And what about your husband? How often is he thinking about the Roman Empire?
I guess I'll have to ask him. That's just not a conversation we had over the dinner table. Okay.
I think about it all the time. I don't know.
What especially about the Roman Empire that you are fixated on?
How much time you got?
The aqueducts.
The aqueducts for sure. Right?
Yeah. Okay.
Yeah. Democracy.
All right.
Right? The fact that wine is drank by everybody every day. I could get down with that,
I could be fixated on the wine. Yeah.
How did you fall down this Roman Empire rabbit hole?
No, we talked about it yesterday, man.
I know.
It's a meme.
Yeah.
It's the kids are talking about it these days.
But why is it a meme? Can someone explain the internet to me?
So there was some girl makes a TikTok video there was a meme first, and then there was a video that the girl asked her boyfriend or husband.
Well, this is the crazy thing about virality is, from what I was reading, the first video on Instagram was like from a month ago. So like a month ago, this woman asks, she says like, women don't know how often their men think about the Roman Empire, and like it takes a month, and then like organically, it just happens, right? It just becomes a thing.
Well, why is
right?
that funny? What's funny about that? I don't understand it.
Because then the girl asks her husband or boyfriend, like, "Oh, how often do you think about the Roman Empire?" Like randomly, and he's like, "Oh, like once a week." And she's like, "Wait, what? Once a week?" And he's like, maybe like no more than 2 or 3 times a week." And she's like, "What?" So I don't know. It's just funny. And then, it goes on and on and on. And then she's like, "But what is it that you think about?" I don't know. It was pretty funny. And then I was like, I hadn't quite realized how often I think about the Roman Empire. And I'm like, man, I think about the Roman Empire a lot. By the way, Stoicism, all Marcus Aurelius, all that Stoic stuff is all Roman Empire. I mean, we could go on and on and on.
Yep.
No?
All right. Well, well
Let's-
luckily for you
let's
all,
just not
we
today.
won't. Yeah, luckily for you all, we won't. All right, guys, if you have any questions about any of our products or services, or if you want access to JC's research or Steve's research, the best person to talk to is not JC or Steve or myself. It is Mary. She's way nicer than us, first of all, and also just knows more about all the things that we're doing. So I recommend giving her a call. I'm going to put the number on the screen as soon as my computer decides to unfreeze itself. There it is. 323-421-7910. Give her a call, and she can explain everything. We tend to get questions in the chat about ones today about like, can I see this? What is that? How do I find it? Or people email. Talk to Mary. Okay, that's my recommendation. She knows all.
I try to.
All.
Yeah.
If you have questions about the Roman Empire, you call Mary. She'll tell
Call
you.
JC.
Definitely not me.
What's a vomitorium? Sounds like a toilet.
I don't know. All
right.
Mary, you brought in the nice ideas. Nice ideas.
Thank
You want
you.
to stick around for the rest of the show, or you got to go?
Sure. No. Yeah, I'd love to stick around.
What do you think? You want to do a little chart report before recess?
Yes, I do actually. Just give me like 5 seconds because my computer is being very slow today.
Bullish Bear is saying, "Come on, JC. You don't think about the Roman Empire. You think about the wine and you associate with it." Okay, what about Stoicism? That has nothing to do with wine. I think about that a lot. I'm pretty stoic. No? I think I am.
All right, chart
Unless
report.
you're a Jets fan.
Can I just say that the chat's on fire today? Great job,
The
everyone.
chat is on fire. You guys are out of control. You guys are hilarious. Steve Strazza making the top 10 today. Hello.
What did I do?
It was the Arch chart about changing their names. That was a good one.
Oh.
That was a good one.
That was my tweet.
That was
I
a
liked
tweet.
that.
Strazza really thought through this tweet. It was a very important tweet for him.
Don't disturb me while I'm tweeting, dude.
I also like Ryan Dietrich up on top.
Yeah.
Hey, when are we gonna have Ryan on the show?
Ryan is going to be. I spoke to him yesterday. He's going to be at Chart Summit next week. By the way,
Get him on the show.
Yep. Spencer will talk about Chart Summit now in a minute. But I like his tweet here. If you buy at the close on September 19th and hold for the next 10 days, this is one of the worst 2-week returns for stocks out of the entire year. The good news, however, is that some of the best returns aren't too far away. This is kind of like the sell Rosh Hashanah, buy Yom Kippur sort of situation, right, Spencer?
Yeah. It's kind of the same thing, even though the dates aren't exact, but yeah, more or less.
But more or less, right?
Yeah.
Spencer, our resident Jewish calendar correspondent.
Jewish correspondent, that's me.
When you look at average monthly returns, if you just use all the data that we have for the S&P 500, so you're going to go back about 70 some odd years, September is actually the only month that on average is significantly negative. Right? No,
February a little or no?
not. I think
It's like right there.
like a couple tenths of a percent, maybe.
Right.
So,
But February, you do get it's a little struggle city in February.
so you got 10 days left. Worst period of the year, historically.
I don't necessarily think that it picks up early October. I think it's a little later on, though.
Are you really supposed to get sober though?
No.
That doesn't sound fun.
Okay.
I haven't had a drink since California. I'm a week in.
Wow.
Not bad, right?
Go you.
Not that I've been drinking all that much anyway. I usually go, I'll go 3, 4, 5 days, a full week, longer, pretty often.
Are you doing a cleanse? Is it a cleanse? Is this a cleanse?
Nah, I was just, after California, we hit it pretty hard. I was a little tired, just cleaning it up a little.
What do you think Louis thought? What do you think Louis thought?
Louis thinks we're freaking crazy, man.
Yeah.
Remember we ordered all that food before the game? He's like, you guys are going to eat all that? I'm like, well, we're going to order more. It's just we have a small table, so it doesn't all fit,
He said he wanted fat American food, so I just ordered all the fried things I could find. And I
mean, what did we get? We got like wings. We got mini burgers, like just classic football food, right? No, I didn't think that was that big of a deal.
No.
Not to you. You're not from New Zealand.
Hey guys. Hey guys, I think we need an update on your fasting. I'll bet both of you failed.
I didn't do it because I played tennis yesterday. I told Perlman I wasn't going to do it.
Oh, right. Okay. So you bowed out already.
Oh,
Spencer,
I didn't even know about it. It was too late. I already had tennis plans.
Spencer, you ate a big breakfast this morning. Don't lie to me.
Absolutely false. I have no way to prove this, sadly. I have not eaten any food since 8 p.m. on Monday.
Are you serious? You did the Perlman 36?
I'm still going strong, honestly.
How do you feel?
I'm not even hungry right now. Like, when should I eat? Should I?
So you're at 38? You're at 38 hours?
Yeah. Well, it was like 8:30 p.m. It wasn't quite 8, but yeah.
Good for you.
Hold on. What prompted this? I missed the fasting memo on Slack.
Perlman's doing like a fasting group like every month or so where you fast for 36 hours. But you're not supposed to play tennis for an hour and a half during the fast because you're going to get extra hungry. And I had already had tennis plans.
So like I will say like yesterday at like 11 o'clock was tough, and then 8:30 9 o'clock p.m. last night was difficult. But like once I got over that hump, I'm great. I went for a walk this morning. Like I feel good.
Just ease into it, Spencer. Have some eggs or maybe some beef broth. Don't just like have a double cheeseburger. Your stomach's gonna explode.
Yeah, I'll probably have some eggs and bacon or something. But I have not eaten any food. This is the longest I've ever gone. I've done, this is practice because I have to fast for real on Monday anyway. So this is just a warm up for that. But this is the longest I've ever gone. And honestly,
black coffee, Rachel. Black coffee's okay. Tea also.
Oh yeah, I've had a lot of, not a lot, but some water and coffee. So yeah, I've been drinking. Don't worry, but just no food.
Anything else in the chart report that stands out? Tell the people where they can get it.
Oh, get the chart report, guys. The link is in the description. I'll throw it up on the screen right now as well.
And then get Eddie Elfenbein's chart there. 2-year yields hitting the highest levels in 17 years. That's a big one. Get Eddie back on the show, by the way.
Okay, Eddie Dietrich. Got it.
Eddie's
there's a link, thechartreport.com, guys. Get that for free every day. It goes out every evening. And then, speaking of Ryan Dietrich and the Chart Summit, so next week we are doing this virtual event. JC's done it before. We're bringing it back for 2023, the Virtual Chart Summit. It is free, but you have to register. It's not available to the whole public. You have to register. We're not going to be doing our normal shows on Wednesday. Tuesday is going to be a normal day. Chart Summit will start, I don't know, call it 4 p.m., 4 in the afternoon Eastern time. Yeah. And then it'll go all day on Wednesday. So no morning show Wednesday, no What the Fick on Wednesday, no Hot Corner, no Options Trade of the Week. It'll be all Chart Summit all day. We are finalizing the speaker schedule today and sending that out. But there is the link to sign up right there. And I'll just
and I'm going to tell you guys right now, we've been doing this Chart Summit. I believe this is going to be the 5th Chart Summit that we do. We started doing this in 2017. So 2017, 18, and then in 19, we did it live in Colorado. Yep. Then 2020, we did it virtual. Then 21, we did it 5. Then last year, we didn't do it. Then we're doing. So this is number 6, actually. Chart Summit Number 6, I'm telling you right now, there isn't a conference in the world, live or virtual, with better content than what we bring at Chart Summit. I am very confident about that. And I speak very highly about some other conferences that I go to, particularly the CMT Association event every year, Future Proof, where we just were in California last week. Great conferences. I will say it again. There isn't a conference on the planet that is going to bring more better content in a single day. I mean, we got killers. Ryan Dietrich. First of all, before lunch, you're going to hear from Ryan Dietrich and Ari Wald. So, like, that alone, we win. And then it's just one after the other. Sean, Melton Demirors, and I are going to have a little chat. I'm very much looking forward to that, very selfishly. I love, she's a thinker. She approaches the market and looks at investments in way different ways than me. So always very fascinating. I'm telling you right now, chartsummit.com, and email us, and we can actually send you some of the archived videos from prior years so you can see some of the stuff that we talked about in the past. There's a lot of evergreen stuff that'll live on forever. We've had killer guests over the years, and next week is going to be no different. So get ready. Chart Summit 23.
I think we're going to have upwards of 20 different people speaking at the Chart Summit. Again, it's
By the way, Chart Summit 2024 in Napa Valley, May.
What's the actual date? Like the date.
Tuesday night, and then Wednesday all day.
It's the 26th and 27th. Again, it's Tuesday at like 4 p.m. We'll go until 6:30, maybe 7, and then gonna be more casual, and then Wednesday all day. And like I said, like about 20 people speaking at this thing. So
I didn't know if I was going to be invited.
You're not.
Stop it. Okay.
All right. Quick recess. Let's go.
Yeah, let's do it.
What do you got?
Okay, so you guys know I'm a big Michigan fan. Said it many times, but this weekend I am actually taking my stock trader son. He loves to, butt the trend. He's a Michigan State fan, so I am headed to Lansing to see the Michigan State game with him and my dad, who is also.
And wait a minute, Mary, you missed the best part.
There's the best part.
Who are they playing?
They're playing Maryland.
That's right, baby. Let's go.
That's right. I don't have super high hopes, honestly. Michigan State's in a bit of they're having a struggle bus this year.
It's Tua's little brother.
It is little brother, yes. So I'm excited.
Bro. He's putting up points, this kid.
I'm excited to take my son to his first college football game. Then
are you going to tailgate?
Next
You
we'll
got
go
a
to
tailgate.
the big house.
Are you going to tailgate?
Probably not, unless I find a friend that might be tailgating.
Come on, Mary. Take a grill, take a cooler, hang out for a couple hours. Come on. You're going to take him to his first college football game? You're not going to tailgate at least a little bit?
You actually make a really good point. So maybe I'll have to hit up a couple of friends that I know are State fans.
Yeah, come on.
All right, Mary.
So that's what's going on with me.
I'm excited for you. You get to see Maryland football in person. And you know what they say? They say crab cakes in football. That's what Maryland does. So, it's going to be a good game. I'm telling you.
Yeah, they do the crab cakes way better than the football. That's for sure.
It's also homecoming weekend for State. So I think it'll be a lot of fun. But Maryland was good last year. You gave Ohio State a good run for their money, which
we
appreciated.
We did.
So
we did.
I'm a little bit nervous. Like I said, State's on a struggle bus this year.
All right, you guys have anything? My recess is the fast, so I'm done.
And my recess is Chart Summit next week. If you take your portfolio seriously, if you take your life seriously, you need to be there.
Yep, it'll be a good time. Always is.
Yeah, hell yeah.
All right. Thanks to our guests today. Thanks to Mary. Thanks to Larry. Thanks to Kimmy. Thanks to all of you in the chat. Drop us a like. Send us an email. Questions at stockmarketmedia.com. We always respond. Or usually. I always try to respond. Mary always responds. So give her a call. 323-421-7910. See you guys later. We got What the Fick at 11:30. We got Hot Corner at 1 o'clock and Options Trade of the Week at 1:45. So stay tuned for that. Have a great rest of your day. Go make some money.
Adios.
Bye, everyone.
End this thing.
I'm trying. I'm trying.
God. End it.
I'm trying.